Good afternoon everybody, it's TradeX again and we're going to be doing another in the ICT series, and today it's going to be everything you need to know about reclaimed order blocks, right? So what are they, how to trade them, how to spot them, and how to execute on them, right? So absolutely everything you need to know about how to execute a reclaimed order blocks. Now, if it means anything, they are probably one of my favorite entries, and the reason being is that they are super explosive, and the reason for that is that they are market maker sell models if it's bearish, or market maker buy models when bearish. And what do I mean by that? I mean that price is accumulating to go long or accumulating to go short, and those positions are going to be wanted to be sold at a decent profit, right? Now, before we get into nuts and bolts, and the way we're going to do today's session is that we're going to go through some bullet points which are super important to help build foundation. Then we're going to drop into some fixed charts, and then we're going to drop into some live charts, right? So by the end of it, you'll know absolutely everything you need to know. Before we do that, if you're new to the channel, welcome. Please do consider smashing the subscribe and like button, right? It does the channel a world of good, and it also helps people like yourself view this content, which is what this is what I'm here for, right? So yeah, it'd be great if you do that. So let's get straight into the meat and potatoes, right? So reclaimed order blocks, okay? So they take place at intermediate levels of support and resistance, right? Or higher time frame PDRA's level of support and resistance. And what do I mean by that? So an intermediate term of resistance can happen in the middle of a range. So it can happen in the middle of a dealing range. It can happen in the middle of a retracement. And that would be an intermediate level of resistance, or a high time frame PDRA matrix level, which, if you're unfamiliar with, this is essentially levels price will run to when they are going into a premium, or they run into when they're running into a discount, and there are levels in which price runs through. If you are not familiar what a high time frame PDRA matrix is, I will drop it in the comments below so you guys can reference that. But and just to let you know, I'm also going to be doing a high time frame PDRA matrix episode, but that is to come. When it is, I will tag it at the end of this video. That being said, right, you don't need to know it all. All you need to know is that you're looking for a level of resistance. And so if bearish, it would be resistance, and if it is bullish, it is support. And so what are we looking at? And this is the crux, guys, and we are going to get into some good stuff in a minute, but it's really important we build this foundation so you guys can understand what's going on, and it will help you build that intuition, right? So when it's bearish, market makers are going to be hedging their positions short by adding positions as price stair steps higher into resistance. And so we're going to go through this in a minute, but as price stair steps up into resistance, what we are witnessing is market makers hedge their positions short. So as we know, they have huge positions, millions and millions and millions of pounds worth, and they don't want to dump it all in one order because that is going to drop the market quickly, right? And so they don't want to do that. They want to accumulate their position to fill their coffers before dropping the market short, right? So we are witnessing, when it's bearish, market makers accumulating positions, right? And the opposite is true when market makers are doing a buy model. So a market maker buy model reclaimed order block, we would be looking for stair stepping down, and what we'll be witnessing is market makers hedging their positions long. What we are looking to do is take an entry off the order blocks that form and become reclaimed on the opposite side of the curve. So as we know, price moves from buy side to sell side of a curve, right? So it moves in this direction. It moves from buying, from selling, so it'd be on the sell side of the curve, to the buy side of the curve if it's bullish, or if it's bearish, we're going to be moving from the sell side of the curve, the buy side of the curve, to the sell side of the curve, right? So don't worry about that. It'll make a lot of sense when we go into some chart examples, but just so you know, we are looking to take an entry off of the opposite side of the curve when it's a reclaimed order block, right? And they differ from order blocks in that we are witnessing a market maker sell model or market maker buy model, and market makers are hedging into a position to build a platform for reversal, right? So where you have an order block theory and you're taking entries off an order block, that is a continuation model, right? So when price returns into the lowest down close candle for a move higher, that would be your order block for moving higher, right? But we are actually looking for this to be a reversal model, so it's a market maker sell model in the case of a bearish example. So we'd be looking to take entries off of the sell side of the curve, right? So reclaiming the order block on the buy side of the curve. And so let's jump into how this looks, and then we'll go into some fixed charts, and then we'll go into live charts so you guys can start annotating. So this is a bearish market maker sell model using a reclaimed order blocks. This is an anticipated level of support, and it can be an intermediate level, or it can be on a higher time frame PD rate matrix. And so let's go through it. We have and how we take entries, right? So we have this expansion higher, and we're looking for the highest up close candle before the mini retracement. We are then looking for expansion higher, highest up close candle before a mini retracement, and then we get this expansion into the level of resistance, right? We are doing nothing here. We are waiting for price to return on the sell side of the curve. Buy side of the curve, sell side of the curve. Price returns and retraces back into the highest up close candle of this run before the mini retracement, right? That's our entry one. Entry one, right? If you miss this, you wait for price to move lower, retrace higher, back into the highest up close candle of this run before this mini retracement, right? And we'll witness price move lower to a lower time frame rate. Now, why I love these is that it's a market maker sell model. So we're witnessing accumulation by market makers, and they're not going to want to sell their positions here. That's not a big enough profit for them. So price is likely to go and run to a much deeper discount of a higher time frame. So I love these for rangy trades, right? So if you see these set up, and it's quite clear to see, it's like this Christmas tree pattern. These are really solid entries and solid trades to take. So that's a bearish example. Let's look at a bearish example, and let's just wrap this up before we drop into a bullish example, right? So highest up close candle before a mini retracement, highest up close candle before a mini retracement, highest up close candle before a mini retracement. On the opposite side, so we're now looking at the sell side of the curve. This is where we frame our entries. We're looking for price to return into the highest up close candle, and for me personally, I always like to take the top of the body. That's just my preference. And then price returns lower. If you miss this entry, you can wait for a place to return higher, and we're looking for the highest up close candle in this drive higher. That would be your second entry. Or if you're like me, you parlay in. So I'll take 2 contracts here, 2 contracts here. But that's up for you to decide, right? Now, that's a bearish example. Let's quickly look at a bullish example, then we'll drop into some fixed charts, then we'll drop into some live charts, and then you guys will be all set, right? So, bullish example. What we're witnessing by market makers hedge their positions long, right? So they are buying their positions long in tranches, right? So we have this price leg lower. What we're looking for? We are looking for the lowest down close candle before the retracement high. We're looking for this leg lower, lowest down close candle before the mini retracement, and then this is the run into the anticipated level of support, either be it intermediate or a higher time frame PD rate. Price moves higher, we're doing nothing. We're looking for a price to return into the lowest down close candle of this leg before the retracement, right? Entry 1. Entry 2 would be, if you miss this, you wait for the price to expand higher and then retrace into what? The lowest down close candle of this leg lower before the mini retracement. Bingo. What are we getting? Expansion higher. Again, same premise. We're looking at a market maker buy model. So this is accumulation for market makers to take the position higher. So we'll be looking to take our positions and peel them off at relative equal lows and a premium range of a high time frame, right? So let's break this down. So we have lowest down close candle before minor retracement, lowest down close candle before minor retracement, lowest down close candle before minor retracement. We're doing nothing. We're waiting for price to return on the opposite side, and then this example, we're now on the buy side of the curve. So we are looking for price to return to the lowest down close candle before the drive high. That's our entry 1. We miss it, lowest down close candle before the drive high, before the retracement high. Bingo. There's your 2 entries. Expansion high. So that's that done. Let's jump into some fixed charts, then we'll jump into some live charts, right? So this is where it starts to make sense for you guys. So let's break down what we have. We have this leg lower. What are we looking for? We're looking for the lowest down close candle before the mini retracement high. Bingo. Draw that across your chart. Next drive down. What are we looking for? Lowest down close candle before the retracement high. Bingo. Draw that across your chart. Okay, so we then get this price run down into the level of what? Support, right? We're doing nothing unless we are confident of this as an entry. Price moves higher, and then we're starting to see signals, right? So here we get a hold of this lowest down close candle before the move higher, right? Indication number 1. If you don't take this entry, wait for price to then show signs that it is holding and it is reclaiming the order block, right? So we can see lowest down close candle before the mini retracement. Bingo, held, right? So if you didn't take this entry, you wait for price to then do what? Lowest down close candle before the mini retracement. bingo, very top of it. What does price do? Comes down to it respects it, right? That's your first entry. Price expands higher and returns. What we're looking for, the next lowest down close candle in the drive before the mini retracement. Bingo. What do we get? Hits it to a tick. That's your entry. In this example, you hold, right? These are very, very powerful. Don't get scared about this whipsaw action in here if you get some. What we actually get in this example is this is a propulsion block. Price moves higher and actually returns into median threshold of this propulsion block before expanding higher. If you don't know what a propulsion block is, hang tight, hang fire. I will be doing an episode on that soon. But just know that in this example, we're looking at the reclaimed order block, and this is a market maker buy model, right? So that is the bullish example. Now let's jump into a live chart. So the reason why I wanted to do reclaimed order blocks is because we had a really juicy one on Thursday, the 2nd of March, which is actually last week. And so for all of those members who are currently subscribed, awesome, you're going to be able to jump into your charts and see this. You may well have already taken it, who knows? And so I highly suggest you jump back into your charts and annotate and look into this, because it will help build your intuition, right? So let's break it down. And so you know when I was talking about intermediate levels of resistance, right? Here's an example, right? So intermediate level of resistance, in this example, it's an optimum trade entry of this displacement leg with inside a range, right? This is an intermediate level of resistance because we're expecting price to move lower. And in this example, it's a market maker sell model using a reclaimed order block. There we go, bingo. How about that, right? So what do we see? What do we have here? So we have this leg higher. What are we looking for? The highest up close candle before the mini retracement. Bingo. Draw it across your chart. What are we looking for? Highest up close candle before the mini retracement. Bingo. Draw it across your chart. What are we looking for? Highest up close candle before the mini retracement. Bingo. Draw it across the chart. We are doing nothing unless you are able to take a trade at this OTE. You could have taken an entry here, and then you could start to look to parlay in entries, right? So more positions. Price moves lower, moves higher. What are we looking for? Price to return into the highest up close candle before the mini retracement in a bearish example, right? So this is entry number 1. If you miss this one, what are we looking for? Price to return into the highest up close candle before the mini retracement. Bingo. You also have another one here. Highest up close candle before the mini retracement. You can see how the body respects it very, very well. And these are so powerful. And look at the move we got. Bingo. Look at this. Absolutely gorgeous move. So if you got in here at 39.37, you got out at 39.25. That's a very, very good day, right? And they are super clean. I mean, look how clean this example is. And if you spot these, take them with confidence, right? Because you're witnessing a market maker sell model or a market maker buy model, depending on which direction you're going. In this example, it's a market maker sell model, right? So this is a very, very strong indication that we're getting accumulation, or in this instance, it's reaccumulation by the market to run the market lower. So they are accumulating positions short in order to drive the market lower. So guys, honestly, that is absolutely everything you need to know about reclaimed order blocks. I absolutely love them, and I hope you find loads of value in trading with them. That's going to wrap it up. So if you have any comments or questions, feel free to drop them in the comments, or head over to my Twitter and hit me there. And as always, trade safe, trade smart, and if I ever see you over in Red Pill Trading, which is my Discord, I'll see you on the other side. Until next time, trade safe and trade smart. Take care.